Good afternoon, everyone. I'm Henry. Today we are going to compare the Standard Chartered Bank with the other banks in the range of banking survey. Let's move on to the first part. It's the background of the Standard Chartered Bank and its other raised in Hong Kong in 2004. It is one of the 3 notes issuing banks in Hong Kong. It provides a banking survey and cover the 60 fast growth market around the world and serve the customer in 85 markets. And Standard Chartered Bank has listed on the London Stock Exchange, Hong Kong Stock Exchange, Mumbai, and Indian National Stock Exchange in India. Standard Chartered Bank has provided different types of survey and products, which include the deposit account, credit card, loan mortgage, and insurance, investment, and MPF survey. For the part of saving account, Standard Chartered Bank has provided e-banking and card support. If the customer wanted to transfer their funds or check their account balance, they can check it by or transfer it by the mobile phone apps or transfer it by the ATM. And about the interest bearing is daily compound interest. About the saving account application condition, it's just the minimum open balance is just 1,000 Hong Kong dollars, and the saving account has provided auto pay survey for the customer to shopping. And if the customer have any question, they can use the phone to call the bank phone number, or they can walk into any Standard Chartered Bank branch. For the Bank of China, saving account provide the saving account service is same with the Standard Chartered Bank. The minimum open balance is also 1,000 Hong Kong dollars, and the Bank of China also provide the e-banking survey and the 24 hours phone survey. There has the graph to provide you to know that the deposit range of the Standard Chartered Bank, and we can see that the saving deposit range in any situation, the interest rate are also 0.001% annual interest rate. And in the Bank of China, the deposit range is 0.001% if the account balance is 1 million below or 1 million below. But if the account balance is 1 million or above, the annual interest rate will be 0.002%. In comparison, the Standard Chartered Banks provide the saving account survey is same with the Bank of China. But if we focus on the deposit range ratio, the Bank of China is better than the Standard Chartered Bank, because if the client wanted to deposit more than $1 million, the annual interest rate will be 0.002%, which is better than the Standard Chartered Bank deposit ratio.
Hi, lecturer. My name is Ko Xingquan, and my student ID is 1233A223. For the loan products, we focus on personal loan and compare it with DBS banks, as they have very similar type of personal loan products. Except personal line of credit from Standard Chartered Bank, there are similar type of personal loan product as personal installment loan, revolving loan, debt consolidation loan, and tax season personal installment loan. So for now, we start the comparison. For personal installment loan, it is to repay monthly with fixed contribution and within the scheduled time period. For the loan amount, both banks provide minimization of 2 million Hong Kong dollars, but the lower income clients will have a larger loan amount in DBS banks. There is loan tenors. Both banks provide very flexible loan tenors of 12 months to 60 months. Next is the APR, the annual percentage rate. The most important tools when we are considering a loan products. It is a reference rate that shows all the fees charged by the bank on the loan products. It can tell you the true cost of the loan products. So for now, at a loan amount of 200,000 in a loan tenure of 36 months, the APR of Standard Chartered Bank is 2.15% and DBS Bank is 6.41%. So we can see in personal installment loan, Standard Chartered Bank has more beneficial interest rate to clients. But DBS Bank has one more function, top-up loan. If a minimum of one installment has been repaid and the repay principal is over 5,000 Hong Kong dollars, with a punctual repayment record maintained, then the clients can apply for withdraw the repay principal, which is much more conveniently apply for another loan. Then is next one. Revolving loan provides clients a flexible bailout credit line. The clients can withdraw loans from the bailout credit line according to their own cash flow needs. So for annual fees, both banks bear the first year annual fee, but after the first year, Standard Chartered Bank charge 1% of credit limit as the annual fee, which is less than DBS Bank's 1.5%. Then is loan amount. Both banks provide maximization of 800,000 Hong Kong dollars to clients. Then the handling fees. DBS banks charge no transaction fees to each transaction, when Standard Chartered Bank charge one of each transaction amount to each transaction, except the first withdrawal. This is the repayment table of both banks, as the primary code by the DBS banks is 5.25% for November of 2019. So for the conditional preferential interest rate, the Standard Chartered Bank is more beneficial to clients. But DBS Bank's conditional preferential interest rate time period is longer than Standard Chartered Bank's 3 months. And also, after the conditional preferential interest rate time period, the APR of DBS Banks is also more beneficial than Standard Chartered Bank's APR. So in revolving loan, we can say DBS Bank is better. Then is debt consolidation loan. Is to help customer consolidate credit card debt at a lower interest and setting fixed monthly repayment plan and reducing the interest expense. For the loan amount, both banks provide maximization of 2 million Hong Kong dollars, but the lower income clients will have a larger loan amount in DBS banks. Then for the loan tenors, both banks can up to 72 months. Then is the APR for a loan amount in 100,000 in 12 months and 24 months. The Standard Chartered Bank's APR is 9.6% and DBS Bank is 13.48%, 13.74% respectively. So in that consolidation loan, Standard Chartered Bank is better. Next one, tax season loan, launched during the tax season with lower interest rate and shorter repayment time periods. For the loan amount, Standard Chartered Bank provides higher maximization loan amount of 2.5 million Hong Kong dollars, but the lower income clients will also have larger loan amount in DBS banks. Then is long tenors. DBS Bank provide more flexible loan tenors of 12 months to 24 months than Standard Chartered Bank's 12 months only. Then is the APR. The Standard Chartered Bank provide 1.98% to new clients, which is more beneficial than DBS Bank's interest rate in most loan amount. But comparing to the interest rate Standard Chartered Bank provide to the other type of clients, DBS Bank's interest rate is more beneficial. And in the loan amount of 1.5 million or above, even comparing to the interest rate Standard Chartered Bank provide to the new clients, the DBS Bank's interest rate is also better than Standard Chartered Bank. So in this part, we may say in tax season personal installment loan, DBS Bank's performance is better. The last one, personal line of credit. The clients can withdraw the credit line by writing check, phone banking, or via Standard Chartered ATM machine. And it is high flexibility, it has no fixed tenure, but monthly minimum repayment of 3% of the standard balance or 15 Hong Kong dollars, whichever is higher. As it is a personal loan product which DBS Bank do not have, so we can say it is an advantage of Standard Chartered Bank in the reality of the personal products. Although DBS Bank also has top-up loan, but it is much more like a function for the other existing loan products. So in conclusion, both banks has great performance in the personal loan products. The customer should make choice based on their own condition and demand. That's all. Thank you. Well, then we move to the next part.
Okay, then I will talk about the other type of the Standard Chartered service mortgage. For this time, I will compare with the Citibank mortgage with five type of the mortgage costs. First one is annual interest rate. Let's do a quick example. For a loan amount of the $300 million, Standard Chartered will charge you to based on the bank best leading rate. We call it BLR is P minus 2.75%, which is 2.5%, and then the 1 month hybrid is 1.245%. This is cheaper than greater than the Citibank 1 month hybrid, which is 1.4 minus 1.245%, which is 0.155%. So in the monthly repayment, we can see clearly the difference is the Standard Chartered one month hybrid payment is $731. Then, but the Citibank monthly repayment is 2,974 Hong Kong dollars. If we calculate the whole loan period, the Standard Chartered can save more than the $87,418. Okay. Then let's see the handling fee. If the mortgage application need to be cancelled, Standard Chartered need to charge you 0.15% of approved amount when you withdraw an application subsequent to your signing of letter of confirmation. So the charging minimum is $5,000, and the maximum is the $15,000. For this, Standard Chartered charging look like more than Citibank, but I think this is also not encouraged to the client to cancel the application. So next is late payment fee and charge. Standard Chartered will charge 1% of the amount of the principal and interest outstanding in respect of that overdue sum as of the relevant payment due date each time you fail to repay the monthly repayment or the amount in arrears in full on or before the relevant payment due date. But the Citibank doesn't have any charging for the late payment, so I think this is also not encourage the client to do a lot of the just like call the client to pay money on time. Next, repayment or early settlement, which mean if you repay full or part of the loan early within 3 years after loan drawdown, it will pay more 1 to 3% of the original loan amount or partially repay amount for the allowance. But this case, Citibank will charge you 3% is more expensive. In comparison, Standard Chartered is more favorable at hybrid than Citibank. allowing customer to enjoy a lower interest rate repayment. But in terms of the cancellation application, standard charge are higher than the Citibank. Although the rate of the standard charge is definitely better than Citibank, this is more complex than Citibank at the handling fee. So customer can choose according to their needs.
Next, we have insurance. So I'm gonna be comparing SCB, Standard Chartered Bank, and HSBC Bank. So as we all know, there are different types and kinds of insurances, and I have chosen two types from the general insurances they provide. So there are travel insurance and home insurance. So I'll be describing each one of them in the next slide. So the first one is the travel insurance. So SCB provides risk-free traveling that starts when a traveler charges the entire return air ticket by using the credit card of an SCB. So insurance cover for entrepreneur referral, medical assistance, passport assistance, and accident. While on the other hand, HSBC provides worldwide insurance service for travelers with a 40% discount rate. So personal accident covers for travelers can be also taken 3 hours before departure in case of an accident or any personal effect. So their travel insurance package has benefits for single trips and regular travelers. So based on the table here, the personal accident covers for provided by the SCB is 1 million, but it is less than the amount of coverage from the HSBC, which is 2 million. So moreover, HSBC also covers the entire expenses of overseas hospital cash requirements and medical expenditures, while on the other hand, SCB partially covers medical expenses and overseas hospital cash limited to only 50,000 Hong Kong dollar only. Additionally, the cover amount paid for the missed event and personal liability expenses are also greater for by the HSBC and bank than HCB. So excluding this, SCB has an advantage on the services of HSBC because of its strength to pay for relatively more amount for travel and delay, trip reroute, or trip cancellation and containment, loss or delay of baggage. Thus, comparatively, HSBC should be given priority to the insurance package of HSBC on SCB because the total amount of benefits offered to the clients of SCB is less than the total amount of benefits offered to the travelers of HSBC. Thus, suggested bank for traveling insurance is HSBC. Next is the home insurance. So in the context of SCB, home insurance is the product of the bank, which is more affordable for inclined customers. So it intends to provide potential customers with protection against disasters. So in this way, the SCB provides customers with home insurance along with the valuable possessions that a house contains. So for HSBC Bank, it provides home insurance products of Aviva Insurance Limited. In this insurance, so clients are given a full package for home security with a free Motorola security camera. So having the capability of smart living streaming. So the client is given 3 options for which they have to select one. So the 3 options are building or contents and combine the 2. So comparatively, the home content of SCB is greater than HSBC. However, the risk per item is also greater than for the SCB as compared to HSBC. while the personal liability amount of SCB more than HSBC makes SCB insurance relatively more beneficial for HSBC. So, but at the same time, so total permanent disability and accidental death benefits of SCB again encouraged to give a preference to SCB on HSBC. So finally, to the conclusion, we have concluded that in the present work, the comparison of different banking services considered for Standard Chartered Bank with Citibank, Bank of China, DBS, or HSBC, the policies and sureties of both services providers have great performance, and they are different from each other, and also it depends on the clients or that the customers should make choices based on their conditions, needs, and demands. That's all for our presentation, and thank you.